The Smart Investor. My name is Ganesh. So market is today around 21,782, close to 21,800. All-time high is 22,127 around. 300 points away. So almost close to all-time high. So those who have not invested, they must be waiting for a correction, looking for entering market and make new investments. Or those who already entered into market or to accumulate or more, so they are also must be waiting for the correction. So those who are not entered or those who already entered into the market, people are there wait so to see some correction because market has been already close to all-time high. So market, whenever market was 18,000, people were waiting for correction. Market was 19,000, people were waiting for the correction. Market was at 20,000, 21,000, people were still waiting for the correction. Market is today around 22,000, still people are waiting for the correction. Is it possible? Is it real? Does it really happen? We never know that. So we never catch the timing market when it gets correction or when it goes up. So one common statement people would say that, right? People lose money, those who are waiting for the correction. Then actual correction happens, right? So because people who are waiting for correction to happen at 15,000, still they are waiting for the correction, but market is around 22,000, almost 7,000 more than still they are waiting for correction. People are still waiting for 15,000, 16,000 or 18,000. We never know that, right? By that time, we keep waiting for the correction. Market, it takes it like no bull run or it journey to all the way to very higher level, higher to higher every day it's making all-time high 22,127. So when market was 18,000, nobody would have expected is 22,000 is so easy, right? All of a sudden, within no time, right, market started reaching 22,000 hardly took time, right? So within 2-3 months since December 2023, November, December, by January, it has hit all-time high just like within 3 months. Is there any stocks to enter into today's market scenario? Market is almost close to all-time high. Which stock can I invest? Which good fundamentally strong stock is available to invest? If somebody asks me, there are very good stocks available, deeply corrected up to 20%. Up to 20%, listen, 20% at a discount of 20%, the very good stocks are available. Before getting to details, just I want to make a disclaimer. This is for educational and analysis learning purpose. This video is not for recommendation for anything. So before getting to that, how do you find a stock is a quality good stock or bad stock? Generally, we will make analysis two ways. One is quantitative analysis, other one is qualitative analysis. Quantitative analysis stands for numbers, right? Based on numbers, we'll check into that. Quantitative analysis is which depends on numbers, numerical values. Yeah, we'll find it how it is. Qualitative analysis is that based on the some management and all other user behavior we'll find out. So in this video, we are just focusing on quantitative analysis. Qualitative analysis is very, it takes time. It needs a lot of efforts to understand. As of now, we'll ignore qualitative analysis. We assume that these companies are already proven. We'll take some proven stocks. We don't need to worry about quality about the stocks. We take already quality stocks, already proven stocks, which are available in the market at a discount. Definitely, we can consider them. So you may me waiting for what are those stocks available? Deep discount, 20% discount, which is not a smaller number, right? The market is at a all-time high, but there are good stocks available at 20% discount. Definitely, we'll have to think about that. Number one. Number two, we'll find out only large caps. We don't take any risk. We'll take stable stock and proven stocks, and these stocks already. I mean, these stocks needs no qualitative analysis anymore. Those have been in industry for years, and all of us know that this is a new, not a new stock. This is a small cap, not a mid cap to analyze. These are new entrants in the market. No, this has been already there years and years in the market. They've proven, they have given very good returns constantly for the investors. But those are available at a deep discount. Without wasting the time, just I'm sharing those details with the formula in the screener. All of you know that screener. So, however, nothing to worry. I will show you that what are those stocks, how to apply the formula, how to find out those stocks. I'll show you that. Let me share my screen. Let's go to screener, screener.in. The screener.in, go to screens, go to create new screen. Then we'll get it as some text box to fill this one. Here we apply some filters or some formula or query based formula. We'll find out what are the good stocks available at greater discount. So for that, first query that we do that down from 52-week high, right? So yeah, down from 52-week high is, let's say, how much down? Let's say 10%. This anything 10 or above will get these stocks. What are those stocks available? Let's see. Let's see. Query this one. More than 10%. How many stocks down from all-time high, means 52 high? We got 3,082 stocks. Oh, these many stocks, we cannot focus on that, right? We'll have to check it out. How we can filter more. If you see down, see, if you see down, it is started from 97%, 92% from 52-week high. These stocks, we don't care about that. We'll have to find out quality stocks, right? We'll find out what are those quality stocks available at good one now, right? And now, so if this is, these many stocks are down from 52 high, more than 10%, but we'll have to find out what is the quality in this one. Means what is other numerical parameter, we can apply that. We have to find sales growth. Sales growth for 3 years. Sales growth for 3 years must be, at least should be 10%. If no 10%, right, why do you need to invest in the stock? The stock should have at least 10%. Nearest 3 years is a good time for to test stock. So greater than 10 is my last 3 years, right? So if you see here, what is sales growth 3 years means, is formula you can see here, right? Sales growth 3 years means compounded sales growth CAGR over last 3 years is 10%. You see now, earlier was 3,000. Now the filter number came down to 1,400, close to 1,500, right? Now, what other parameter we can apply? We'll see. After that, not only sales growth, is it company consistently uh, posting profit? We'll have to see that, right? So profit growth, sales growth, and now profit growth over 3 years. Profit growth over 3 years should also be 10%. So we already told, right, a large cap companies, we are going to check it out. So if it is large cap company, should be at least 10%. We cannot expect huge number, 20-30% large cap growth, right? So minimum 10% consistently is giving, that is good. So if you see profit growth 3 years, for 3 years, greater than 10%. See, 1,500 came down to around 1,156. Now, what else? Price to earnings, right? So we'll have to check this current value is an opportunity or a higher valuation. To find out the valuation, we'll have to see price to earnings, right? Price to earnings. What is the price to earnings? Price to earning is must be current price to earning must be lesser than historical price to earnings of 5 years. Let's say 5 years. 5 years, right? 5 years is median PE, right? If you take 5 years median PE, current PE should be less than 5 years one. So you can see here, right? Median price, you can see here, right? Median price to earnings ratio during last 5 years. That is, we are checking. Now, let's see how many companies will get it. Now, 283. So, right, earlier was around 1150. Now it came down to just in hundreds, so close to 300. Right now, what is other parameter? I'll show you. Now, other next important parameter is people who are coming to stock market, right? They're expecting return for at least 12%, right? Minimum expectation 10 to 12% per annum is a minimum expectation in stock market. Otherwise, one can go for other guaranteed products, right? Or government securities or fixed deposits. There are other things. So why we are coming into stock market to? Because they beat in inflation. If you consider, if you get a return of at least 12% or above, that is where we'll get into stock market. So return over, we'll find out return over, let's say, last 10 years. So we are checking 10 years return, not just a 2, 3 year or 5 years, not 7 years. 10-year return must be greater than 12. So if you see price, right, CAGR over 10 years uh, should be greater than 10, which is consistently giving a good profit. So if 1 or 2 years, 3 years is not giving profit, we cannot make it bad company. So good company is really identified within 10 years time. Check it out. So earlier 300 companies, it came down to 119 companies, right? Now, so as I told you, first thing, right? First thing I told you, right? So first parameter to put it here is we need to filter to take large cap company. For that, formula is market capitalization. Market capitalization is greater than at least 80,000. What does it mean? Large cap company. So we are getting into large cap company, which is giving return over 12% for last 10 years. And also down from 50 to week high is more than 10%. Sales growth and profit growth should be about 10%. Price to earnings, PE ratio, PE should be currently valuable company, right? Which means historical PE, median PE 5 years we take, it should be less than that. Let's run this one. How many companies? 5 companies. Earlier, without this market capitalization, we got more than 100 companies. Now it came down to 5 companies. Hope you understand, right? So find out, right? So for all the way from 3,000 companies, 1,500 companies, 1,150 companies, 300 companies, 200 companies, 100 companies, now came down to 5 companies. Now, see, understand this one. These 5 companies, what are the parameters we filtered? Which is a formula we applied here, right? So this HDFC Bank, toppest discount, highest discount it's available, right? 20.15% discounted from the 52-week high. Bajaj Finance, 18. Bajaj Finance, 18.77%. Asian Paints, Hindustan Unilever, Nestle India. These top 5 companies are available at deep discount. So these 5 companies, do they need qualitative analysis? Obviously, no, right? These companies have already proved in the market. Everybody knows it. Only when value is there, at discount sale is going on, right? What exactly we say that, right? So it is discount between 11.52 to all the way 20%. These 5 companies are available. So those who want to study more and invest a good quality companies at a deep discount, definitely they would check and apply these 5 companies, find out. Why these 5 companies are being corrected like this? One can check it out, right? So various reasons. This is not a internal reasons. These are purely external reasons. A company is getting corrected due to internal reasons. That is where we need to stay away. But company is getting corrected due to external reasons. We need to look for an opportunity. Internal reasons means due to any bad management, due to corporate governance, due to any issues, stock is being corrected, we have to stay away from that. External reasons means like due to demand supply, due to inflation, due to sector wise correction, due to merger and adjustment, or due to rural growth is slowed down, any such factors, because of that nature of the business, that impact we can see 1 or 2 years, like that, 3 years. But of long run, those are bad times, are considered opportunity to uh, enter into that one. So these are the five companies. If you see, very good, fundamentally strong companies, quality companies, and blue chip companies. Nobody can deny these companies to for investments. So these five companies, at a particular query, we found these five companies to invest. Of course, you say there are no other companies, to any more companies. Definitely, you can switch this companies of this parameter. Say I put 5 years, I have put 3 years, you can change to 5 years. I can change it to discount for 10%, or market capitalization 80,000 I put. You can put 10,000. You get some small cap companies, a mid cap company. You can put 20,000 market capitalization. You'll find some mid cap company. So like that, you can keep changing market capitalization. You can keep changing different parameters. Or if you want to put debt to equity ratio, suppose if you want to add, you'll get some other companies, definitely. So if you keep changing this query as per your requirement, you will definitely find more companies, better companies, more other companies you to invest. If you see here, one more thing, I want to show you this. See, industry wise, if you see, FMCG, two companies we got, paints, one company, finance, we got one company, banks, we got one company. Banks, HDFC Bank, finance, Majaz Finance, paints, Asian Paints, FMCG, Nestle India, and HUL. So these five companies are definitely a blue chip companies. One can not simply ignore due to whatever reasons. Somebody wants to invest for longer term. Yes, definitely this is a good time to explore, study more, and take a decision. Hope this video is useful to you to understand. If you like, please do subscribe and share this video for your friends, and press the like button. Thank you for watching.